All right, let's talk about government shutdowns. It is Wednesday, and if the government doesn't decide by 1 o'clock today, we are going to be dealing with a government shutdown. What does that mean for your wealth? I am Jessica Weaver, wealth advisor, founder of the Wealth Boutique, and all-female financial firm. So let's see what's going on here. So we've had 21 government shutdowns since 1976. They usually last 7.8 days, so about a week they usually last. However, in I believe it was 78, they shut down 1 month, reopened, shut down the next month, reopened, and then shut down. So 3 consecutive months we went through this process as well. What happens to the markets during this time period? Well, the good news is 90% of the time the markets are up 1 year out from the government shutdown. 90% of the time, markets are positive. They are positive about 18% 1 year out. 18% 1 year out. That's a pretty good return given the uncertainty, the volatility that tends to happen with government shutdowns. Now, side note here, ChatGPT was incorrect with its performance with the stock market during government shutdowns. It said they mostly go sideways. That is not true. We see here 90% of the time they are positive and up about, on average, 18%. So what should we do? Knowing we might have this government shutdown, we might not. How should we do anything proactively with our investments? The biggest thing to think about is quality over headlines. You're going to have so much headline noise here with the government situation. You want quality companies. You want companies that are not tied to things with the noise. Look at, do you own a lot that are tied to government spending or contracts, government contracts? Those are going to be most likely hit if there is a shutdown for it. Okay? Don't overreact to the noise. You can see 1 year out, 90% of the time, the markets are positive. Keep that in mind. Investors tend to sell during these periods and they don't reinvest until it's too late and they miss the recovery back if there is a pullback for it. And they tend to underperform about 40% of the returns if you were to stay in it. This is why we rely on the managers, the experts, because they know what to do during these times. They don't panic. They're very strategic. They are intentional with any changes that they're making across the board with the money. We tend to see a small dent hit on GDP following a government shutdown. Employees are out of work. They're not getting paid. The contracting dries up. They're going to spend less in the economy. How does that impact GDP? Usually about 0.4% decrease. But within a year, that tends to be recouped. So pretty quickly as well. One thing that's going to be very sensitive, especially during our current interest rate environment, are interest rates, credit spreads, bond yields. Those are going to be the most sensitive items that will be most likely impacted by the government shutdown for it. So again, think long term. 90% of the time, the markets are positive after a government shutdown. Go quality over headlines here. And are you at risk with a lot of investments on the government side, on defensive infrastructure or contracts, government contracts? Now might be a time to reposition those pieces and watch out for the bond yields, the credit spreads for it as well. If you need any help navigating the government shutdown, if it happens or not, you know where to find me, thewealthboutique.com. Shoot me a DM here or respond if you're watching this through our newsletter. You can respond there as well. I am here to help. I am Jessica Weaver, wealth advisor, and we are here to help navigate all of these market volatility, and there will be volatility during this period of time. The markets are actually mixed right now as I am recording this live. We have the S&P is up, the Dow is up. Oh, the Nasdaq is up too. They were down earlier today. So we're at this weird part of the markets where bad news is good news because we're thinking there might be more easing from the Fed and they're going to continue to lower interest rates. But as they lower interest rates, that also means that the economy needs help. It needs some spur. It needs some growth in there. So we shall see how this plays out. So stay tuned. And tomorrow night, we have a new episode of Women Behind the Millions where we're going to bring to you an expert, a professional on how we can help you with your wealth. We are still with our financial trendsetters, ladies. All right, I'll see you tomorrow night, 7 p.m. Eastern Standard Time on E360. See you later, ladies.